the week ahead. We're going to do this in a couple of parts. The first part is the simplistic approach to preparation for Monday. I get my information from TD Ameritrade. The TD Ameritrade daily bar shows the 200-day moving average right around the 6,000 level. For Monday, the short-term trade should be relative to the 200-day moving average. Do we go above it or below it? But I'd like to be a little more expansive on the second part of today. For some period of time, I have talked about the possibility of stagflation. That has generated a few comments from readers trying to educate me and informing me that I have no idea what I'm talking about. It doesn't develop, stagflation doesn't develop overnight. As a lot of you know, I've been around a few years, and I was clearly around through the period 1973 to 1982. 1973, 1982 was a period of stagflation, and it was a difficult time in the market for trading. From the definition, stagflation is the combination of stagnant economic growth, high inflation, and high unemployment. If you were listening to the comments made by the Chairman Powell on Wednesday, he said the odds of stagflation had increased. So I just set that up as just an understanding of what we may be dealing with in here for some period of time. The market has been one time framing lower for the past 7 sessions. So the short-term trend is down. It's not dynamic on the downside, but it is down. Let's go and take a look at the daily profiles. Volatility has been very difficult for many of us. As you know, the market is very random and constantly subject to headline risk. Monday, value was higher. Monday morning started out with a short covering rally. Short covering rally is generally recognized by the P formation. And if you look at Monday, you'll see a long tail on the bottom, followed by profile on the top that looks similar to the letter P. Short covering, while it takes the market higher while short covering is going on, it weakens the market on a longer term basis because it's removing the potential buying power. If you follow value as a daytime frame trader, if you focus on developing value, it will help you handle some of the volatility. Tuesday, value was clearly lower. And as you can see, the market, was fairly weak on the close for the day, very strung out. Wednesday, value was basically unchanged. What really triggered this discussion of value was the volatility that we saw early this morning. We had a market that got very, very short over the holiday, and then we had some very fierce short covering this morning. So many people that are highly focused on price can have a very difficult time. These markets are choppy and they're volatile. But if you looked what happened as Friday developed, value was lower. Being able to focus on that value made it easier to handle the volatility as we went through the session. The point I'll leave you with is very simple. The short-term trend is down. I think we've been saying for some period of time what I have seen in the market. I have seen the long-term buyers being absent from the market. That doesn't necessarily mean that they're selling. But when I say they're absent from the market, that's an indication that they're probably not adding to their overall positions. There may be some change in some of their positions, but the overall commitment to the market probably has been relatively unchanged. Markets very often drift lower, not because of longer term selling, but because of the lack of longer term buying. So I've been saying for some time, I think I see a lack of buying but a longer term. And I think there's some short-term selling has been relatively constant in the market. Now, it doesn't change easily because so many people, we've been, for 2 years, it's been a bull market, and most people have benefited by buying breaks. This market has slowly given way. I think we're in a very interesting and possibly another volatile place, and maybe a volatile place where we get change again, either acceleration to the downside or move back up. To start off with on Monday, as I said in the opening remarks, focus on the 200-day moving average. That appears to be what the market was doing today. Because we see the potential for increased volatility and possibly directional acceleration to the downside or to the upside, depending on the 200-day moving average, we are going to do a free webinar at noon Eastern on Monday. Please feel free to join us. And the sign-up link is in the description below. Have a great weekend and have a great new trading week. Thank you.